So we're going to go ahead and just cover another back test. If you've watched a few of these, then you'll probably be quite familiar with the process. But essentially, hedging is really great because it shows you how to keep risk low whilst maintaining a clear high profit structure. We're going to go ahead and show you how that's done now. So we're going to go ahead and we're just going to cover the origin here. You can see at the moment we've labeled various levels. Now that might not make a huge amount of sense if you're not in the Trading Mentor Academy. However, most of the time you can see that really just comes in line with key support and resistance areas. It's very easy to just talk about support and resistance off the hat without much explaining. But essentially that's where orders are going in and out, either algorithmically most of the time or by actual human input. And often if there is human input, it's just a case of heavier sizing. So we will roll through at this point. You can see we're now short. Again, remember, don't jump on the comments and say, oh, the sizes were really small. You can change the sizes you want, as long as the sizes aren't a ridiculous amount. But we're giving you a baseline to choose from, which isn't going to be massive willy-nilly trading because we don't believe in that. But you could be trading other assets at the same time with the same size and the profits would pick up that way. So just remember that whilst watching. So you can see prices climbing away. You've got a trend quite clearly on your daily time frame. You can see how it adheres to the 24 EMA river. Okay, so we're going to start to get short because that trend has existed for a decent amount of time. Now, this particular move you're seeing away is incurring a $1,300 drawdown, so 1.3%. So we can add again, slightly heavier than last because it's really not affecting us at all. And as you'll see, this video will end in net gains overall, as every single one does. So the drawdown stretch there, nearer 3%, but because the price is stretched so much by so many pips, our next short allows us to be in no problem. We take a hedge long to cover part of our 0.4 risk, so hedging half the size, and that gives us about a 13th of that former loss. So now we've got about 3/13 of that former short that's out the money. Okay, it's 400 or 500 pips out the money now. And this trend has already existed for, now about 1,100-1,200 pips. So a decent way. So we're going to take a light hedge just to cover some of the exposure. We've now got a decent drop, again, another $120 in the bank. And we can just add a little bit more to the hedge side because we're dipping down to that 40 MA, which is usually a key long zone area. Take off that offer of $72 or so, add a nice tiny short, just to sort of equalize really the exposure you've got at this point. Okay, so just playing around the river, not really much going on at the moment. And now getting that push up and down and up and down, really not getting a lot of price action to give us anything to do with. Of course, again, you could be trading those minute movements every day if you really wanted to, but for the purpose of this video, to keep it short and easy to understand, we're going to sort of map our entries out quite clearly. So there's $100 there again. Okay, and we'll just take another light short. So a bit of short exposure in, we can take that off perhaps now as we're dipping to those MAs. We'll leave it on slightly longer. I'm going to be looking for some hedge long opportunities if the dip can be a bit bigger than that, because we're likely to see a rebound. So we're killing that off for $74. Now we can take some hedge long exposure, so 1/5 of the short exposure, which is fine. And just see what happens to price. Now it's sort of moving sideways. You're really not getting a lot of volatility. It's unlikely any market sentiment is having a big impact, and the market's quite unsure where it wants to go. Nonetheless, we can take a bit of that short exposure off. And as price starts to drip down, we can really look to cover ourselves on the long side and take advantage of this mean reversion that is occurring. Okay, anytime we're dropping away from the mean, we want to take advantage of that if we can, because we're going to get an ideal price. So we'll add a little bit more short exposure now because it looks like we could start a newfound downtrend. Not concerned what happens to that hedge long particularly, and we can take gains off there. I mean, that hedge long is very light. We're okay to leave it on just in case, but if it does pick up any drawdown, that's really not going to affect us a lot. So I take a long there, see where we can get with that. And okay, so flashed up to the river, bounced straight off. Okay, Now we're really getting a decent mean reversion, price is pulling down. And it's likely if a downtrend is going to continue, exactly that is going to happen. So bounce off there, that's why we took the long. You know, within a downtrend, you've got to have up moves as well. And there was that one. Add the short exposure back a little bit, take that off the gains. Add another long just to cover ourselves. So now we're almost ready to extinguish that short. Okay, and you can see if we add another long, we're in a pretty good position here because we've really hedged a lot, well, all of that exposure now, a bit more than the 0.4. But nonetheless, I mean, really that cycle of us being down on that original entry has not been a problem. And we've been able to take lots of hedge positions long against it and accumulate gains so that if we did want to remove it, we could, okay, and we're not going to be affected by it particularly. And that's the point of all of this. Instead of using stops, you're just taking light entries and accumulating light gains that are going to buffer the positions that are in drawdown. And ultimately, the equity curve will drift into profit, and then you'll see overall gains. Like I said, every single video, that's what we end up with. So don't forget as well, guys, if you want to learn how to do this, just jump underneath the video. We'll keep going here to see how much we can accumulate through this current market cycle. Now, you can see that's a pullback to what would make this trend reliable, which is the river, the 2040 MA. And we can add a short in there just to cover our longs a little bit. It does turn out that that short has broken through, but it's only very small. It doesn't really matter. You know, we're not affected by that a lot whatsoever. Okay, it's really not dangerous. We can take it off. And we can add another light long. So we're really just playing small positions. Again, yes, the gains aren't going to make you a millionaire, but you're not busting your account. You're now a profitable trader, and you could be trading various assets as well. You don't need to just be sticking with the Orgen only. I mean, there should be someone who says, you know, the sizes aren't large. But again, like I said, I'll just refer you back to that part of the video. So now 1.4% up. Hardly any drawdown as usual. Clear net gains. So again, we'll keep trading this market cycle and see sort of what we end up with and what that looks like overall. So let's just see where price goes now. So take that off. Okay, and add something there. Okay, now we're moving back into these longs, and you can see instead of having a 0.4 short out the money, we don't, you know, we've only got something light. We've got 3 0.1 spread. We've removed that long for a loss, probably our first loss, just in case price falls. It didn't fall, but we wouldn't have known that anyway, so it's not a problem. We can take a very light hedge just in case because we expect price will fall further. And now we've made a buffer with our profits taken. We can be a bit more loose on the hedge side to the long side. Okay. So we're just taking very light hedge longs because if the price now, you know, plummets through, what we can do is we can take off those shorts and probably take off those longs as well. So we're just going to have to dig in here because the entries sort of cascade on FX replay. So we'll just close them out manually like this for about $100. And we'll just pop that back down there. And yeah, so add a long at the extent of this river again. Take the gains off there, just light hedge longs, so just covering our risk. You know, we don't want to be too exposed, and any sort of thump move down, we can start to collect the profits there. So let's keep going with this and see what it ends up looking like. Okay. So nice thumping down move. Again, like I said, the longs just not threatening at all. They're only small sizes. And we're drifting on a good range of price action at this point. But because the sizes are so low, you know, we're really not going to be vulnerable to anything major. So just take that bottom low off. And now really, if price decides to rebound here, which I wouldn't be surprised if it does, we'll be able to remove these things quite efficiently. So we're already up 1.8%, no problem. You see the weekly is showing a massive drop down. Okay, you can see that 8% or so. So we definitely don't want to be short into this key support zone. And at the 100 and 200 cross, that looks like it may occur in a minute. So if you just check here, you can see what we're aiming for, the kind of push we want, and what that's going to look like. You see the MAs being flickered and highlighted. So if we take something, a little bit more considerable than before, it may help. And you can see that support zone has come through exactly as we aimed. And now what we can do is we can look for a light short hedge, because if it turns out price keeps rallying, we can just remove those longs. And because we've accumulated so many gains via hedge, we can pay for any further drawdown if it had gone the other way, i.e. if it had just dropped back and those longs had continued to go out the money. So at this point, we're probably now looking a lot more median. We've got a lot of light sizes on. So once price gets completely median, we can probably close all this out and just sit at overall net gains. The drawdown never more than 3%, which is really good. Extreme accuracy rate we'll view at the end. And you can see now those light hedges are fairly balanced. The drawdown is only a few $100, therefore, okay. So like I said, we can keep going, or we could just end up removing everything to end the cycle. And really the goal of this since the start is to get out of those heavier positions that may be in loss and just extend into more comfortable drawdown. Okay, so if we look at it now, you can see there is this one. Just take that off. And now we haven't got much in the way of drawdown. Like I said, if the price just falls now, which you may expect at a key level like this, as we've highlighted, that's why we highlighted them all at the start. You can see how they've become incredibly reliable for entries. We'll be able to just start to ease out of this. I mean, the drawdown now is only $188, so we can close everything out. And there you go. Overall net gains, doesn't matter where price goes, doesn't matter the asset, doesn't matter the time. It's safe trading when you have got nice, clear accuracy. You can see a lot of the time the win rate is the same. 83% is normally what we're averaging, or more, 85% plus. And you can see the drawdown never gets to anything threatening whatsoever.